So when should you expect retracement on the market, and how can you use this retracement to catch the next big move? So for example, a market is bearish. A bearish market will make a lower low, lower high, lower low. So anytime we make a lower low in the market, like here for example, we've broken structure to the lower side, so we've made a lower low. At this point, this is where you expect to see a retracement. And if you were in a bullish market, the same thing. Anytime we make a higher high, that's the point you expect to see a retracement, because at this point here, this market is at a discount. And you cannot continue selling at a discount price, because the selling here, it's too cheap. Always, whenever we are selling, we want to sell at premium prices. That is for bearish market. For bullish market, whenever we want to buy at discounted prices. So now, at this point here, you're going to mark any key level on this price leg here. If you get a fib tool and you do that, you'll find that most of the time you'll find there's a PDRA at the 50% or slightly below the 50% or even above the 50% of this Fibonacci range. So you expect that the market will retrace to this key level. It could be a fair value gap, it could be an order block, whatever PDR rate is. You'll expect that the market will retrace to this level. Once we get to this level, this is now where you're going to catch the big move. And when you're catching this move, because if you are bearish, you expect that the next move should do what? We should break structure to the lower side and make another lower low. And this is now how you can catch your good move as the market moves to make a lower low. Selling at this point is better than selling here. So if you look at this DXY, you will realize that this week was really not the best week to trade major pairs, especially USD pairs, because you can see here, we made a lower low. The week started here. This yellow line is where the week starts. So which means we've made a lower low. So after making this lower low, at this point here, we should be expecting to see a retracement. You should not expect that this market to continue going low, lower, lower, low. No, you should expect to see a retracement to any key level on this leg here. The key levels here we have this PDRA here. This is a fair value gap with a volume imbalance. You also have another PDRA here. So the best way is to wait for the market to go to your tag your key levels. Once price has tagged your key levels, of course you need confirmation. And there's some things that we look for confirmation. Once you get our confirmation, that is now the time I'll take advantage of this move and continue selling. That is if this market is still willing to go lower, to go make another lower low. But again, you're not here to predict the market. The only thing you're supposed to do is just to use market structure to guide us. And the best way it can guide us is if once we make a lower low, we break a structure, expect retracement. Anytime we break structure, always expect retracement. And from the retracement, that is where you're going to catch good moves, and that is how you're going to take advantage of these moves in the market.